The Icons of Real Estate Podcast. Are you ready to learn the proven money-making secrets from top-producing icon agents? Ready to skyrocket your business? This podcast is for you. Tune in every week with your host, Tomasz Fonseca, and find out how to implement proven strategies to 10 times your business, from $3 million to $30 million in just 12 months. Brought to you by the Masters at Real Estate Marketing, Ardor SEO.
Welcome to the Icons of Real Estate podcast. I'm your host, Patty Thiel. Today's icon is Charles Carillo. Let me tell you a little bit about him. In 2016, Charles founded Harborside Partners, a real estate syndication company that offers active investors and passive investors alike the ability to partner with them and purchase larger, more profitable assets. Their firm has been involved in more than 150 million worth of real estate transactions, and they have an easy-to-navigate website that delivers volumes of free education, along with a blog that features educational articles and the latest real estate news. Additionally, Charles hosts a real estate investing podcast called Global Investors Podcast. Welcome.
Thank you so much for having me on, Patty.
Oh, I'm just thrilled to have you on. I'm going to learn a lot today, I think. So usually we have our guests start by sharing their story. And so I'd like to hear from you how you became, I don't know if you're a real estate investor yourself, probably are, but help others, how you got to the point you are now, how it started, and just walk us through it. Did it start when you were a little boy, teenager, after college? Tell us.
Sure. So I've been involved in real estate investing my whole life. My dad was a multifamily real estate investor. Never syndicated any properties, though. They were all properties he owned. And I think kind of like the height of his portfolio, he had about 100 units himself and with one partner. And he self-managed everything. He had a small group of people that managed his properties for him. And when I got into the business, I bought my first multifamily property in 2006. And so I've been investing in multifamily for quite a while. And recently, what we've been doing is we are, over the last few years, involved with real estate syndications. So now what I'm doing with our firm is Harborside Partners, is we are raising money from passive investors and we're buying larger properties. And I'm initially from Connecticut. And when I started buying properties in 2006, I self-managed those properties for 6 years. And I moved to Florida in 2012 and instilled third-party management on those properties. And when I moved down to Florida, we started focusing on larger properties by way of getting into the syndication. So that's kind of a little background on myself and myself getting into real estate investing.
Oh, thank you for sharing that. That's very cool that your father was in the business as well. So I wanted to ask you, what are the advantages to investing through a real estate syndicate?
So that's a great question, because you'll have a lot of people, most people don't I guess they don't really understand what the syndication model is. And when people say, every time I usually will bring up syndication or real estate investing to people, it's like, oh, I don't want to deal with it. I don't want to deal with tenants and termites and all the headaches and all that. And I understand totally. I mean, I self-managed for many years. I understand everything that goes into that. And I know it's a 24/7 job, even if you have people that are handling work for you, because it's just how it is. The thing though is that with the real estate syndications, it allows real estate to really be a passive investment. And even if you have owned properties and you have a third-party property manager, it's really a semi-passive investment. And when I say semi-passive, it's really saying that you have a property manager that's handling a lot of the day-to-day, a lot of the calls, but it's also, they're going to be reaching out to you either way and getting questions answered, getting the okay, figuring out what you want to do. If something's broken and needs to be repaired versus replaced, that's when they're going to start reaching out to you. And it's not a passive business per se. And a lot of people will always say, oh, it's passive investing, or it's passive. If I own property, it's passive because I have a property manager. And it's just not true. If you want fully real estate being passive investing, you have to get into a syndication. And there's two parts to the syndication model. Just as a quick overview, there are general partners, which is what Harborside Partners is. And we are the ones that are finding the deals. We're funding the deals. we're putting together investors, and then there's limited partners, which are the ones actually putting up money. And our firm will be on both sides of that because we will be putting money into the deal while also finding the deals with between our firm and our partner firm. And we will also be finding financing for them. We'll go through the whole process. And so when you are passive investing, it is a very straightforward process where you're just getting paid a regular distribution, usually quarterly. And then we're going to hold the properties. And we usually would say 5 to 7 years. But over the last few years, it's been a lot shorter because of what happened with the real estate market. So it's, but in most cases, it's 5 to 7 years, and you can receive quarterly distributions on a regular basis without doing any work.
I love the sound of that. Just get that money rolling in without doing the work. That sounds great. So how do you find those investors?
So with kind of what we've figured out with our niche is we focus a lot on international investors that are investing here in the United States. And we probably are about I would say probably 40% of our investors that invest with us are based outside the United States, and about 60% are based in the United States. So we're really well versed with international investors as well as US investors working with us. And it allows us the ability of offering our passive investing business and opportunities to a wider range, where you'll have a lot of real estate syndicators that only will deal with US investors, because there's a couple more steps and a couple more hurdles that have to be done to allow an international clientele. And we're able to, if anybody ever reached out to us, we're able to kind of point them in that direction. So that's really one of the things that we use for working, and one of our niches we use for working with investors. And then we also have a podcast and the YouTube channel that we use for educating people and helping them on their journey, whether that entails being an active investor or whether that is becoming a passive investor.
Oh, that's great that you do that. And how would they find your YouTube channel?
So if you just go to harborsidepartners.com, and there'll be a link right there for our YouTube channel. And then there's some other free information, education on the website as well that you can look through and review and kind of learn more about what you're doing and learn more about passive investing.
And could they subscribe to your podcast through your website as well?
Yeah, sure. What my podcast is, it's called Global Investors Podcast, which is globalinvestorspodcast.com. And there's links to it off Harborside, and you can, sign up there. You can learn about it. And what I'll do is I interview an investor. Usually they're in the United States. They're like professionals that are working with investors, and kind of go through their business and understand what their model is and how they make money. And it's all different portions of real estate. So we'll have some self-storage people on there. I mean, we've had people that do cell phone towers. I mean, anything you can make money with real estate. I like to get people on the show because real estate there's so many different facets to it. And you don't need to do them all. You only need to do one really well. And it's just, so I like to bring them on and kind of educate people on what's going on. And then I do a second episode that comes out on Saturdays, which is just myself talking for 5 to 10 minutes about different things that happen in our business. And I call it Strategy Saturday. And it's kind of giving an overview of things that I find are interesting, or answering questions. If people email us questions, if I get a bunch of the same ones, I'll do a show on it. So kind of stuff that I feel is very important, or stuff that I've realized with my business, what we started doing or what we stopped doing.
That's really great. And so you kind of answered my next question, because it was, do you have a specific investment strategy? But I imagine you can't. If you're investing in anything from storage units to cell phone towers, it has to be a different strategy, doesn't it?
Well, on what are we interviewing on? That's a great question. When we interview people on the podcast, it's all different realms of investing, most of them that we're not involved with. So we're not involved with cell phone towers. What Harborside does is we're focused mainly on multifamily, large multifamily real estate. So we're purchasing 100+ unit multifamily complexes, specifically in the Southeast United States, I'm based in Florida. So it's a growing area. It's a great area of the country. And different investment opportunities that we work with other operators on is going to be self-storage and mobile home parks. But our real focus is really on multifamily. It's something that I've been doing for many years, and kind of know it inside and out from being on all parts in the business.
Right. Boy, Florida, like so much of the country, has really exploded, hasn't it?
It's
And so,
crazy.
yeah, so you're in Florida and you're also in Georgia and Arizona, is that correct?
Yeah, we have assets in Georgia, in Arizona, and most of our assets are in Florida units.
Yeah. Um, rents are so high. You hear it on the news all the time. Are they going to continue to rise? It seems like it is a great time for an investor to rent out properties. Is that part of what you do?
Yeah, so when we're renting out properties, and we never do our numbers on rents increasing as they are, and I don't think this is going to continue. The rent increases as they were. There's a lot of different parts of the economy that have given rise to that, whereas people are moving into these areas that we've invested into and where we focus on, number one. And that just is, there's not enough units, and that's just kind of how it is. Where we are now is, though, I think it's going to be very steady for years to come. And it's usually in any portion of the market cycle, you're going to have multifamily being very resilient. And I say that because where we are now with interest rates rising, it's harder now for people. It's like cut out tons of people. I think I was reading something like 20 or 30% of people, just with interest rate increases already, are now not able to afford a $400,000 house. So as interest rates continue increasing, or if they stay where they are, it's just going to make it where people aren't able to make the jump from renting to owning. And we're seriously underdeveloped. We've been underdeveloped by hundreds of thousands of units per year since 2017 in this country. And it's something that I don't see that ending where we are. Now, different parts of the country, that's not everywhere. So I'm originally from Connecticut, and units that we used to own in Connecticut, we don't own them anymore. I mean, that's not a growing area. That's a very stagnant area. And there's other parts of the country that are very stagnant. So it's important that when you're investing, to be investing in areas that are growing, that are you have a growth, not just in population, but in jobs. And then you also have areas. The third thing we really look at is we're looking at a consistent decrease in crime, and over like a 20-year period. And that goes, crime indicator is more than what people think of, just like the police. If you can look at a crime stat over 20 years, it also tells a lot about that market and that MSA, and it tells you where they have been investing money. So if you look into, like, Tampa's a perfect example. Tampa's had an increase over the last 20 years in population, in jobs, and an inverse with crime, just decreasing every year for the last 20 years plus. And that just shows that they've been investing a lot of money into healthcare and also into crime, fixing crime issues, because you'll see it sometimes where they'll have jumps or drops in crime. And that's where you're locking up people, you're letting people out. That's not really fixing anything. So if you look at an area before you're investing in, and you see a consistent, now obviously there's going to be little bumps in the road either way. Sure. But if you look over 20 years and you start seeing, straight lines, different ways, then you know that, they're working on something, and it's working. And that's going to be an area that, because you can't just change it overnight. So it's very important when you're looking at these areas, and this will give you a mix of both cash flow, which we love, and we were talking about there in the quarterly distributions for investors, but it'll also give you appreciation. And if we can get a mix of that, I think that's the best of both worlds when you're investing in real estate.
Boy, that's something I hadn't really thought of. Of course, nobody wants to live in an area with high crime, but to look at it over a long period of time. I had heard good things about Tampa. What other hot areas in Florida should people look at?
So we love Jacksonville. We love Orlando. We love, like, all the main things you've probably heard. There's other places too. It's important that when you're looking, I think you hear, oh, well, it's growing in an area, and growing always leaves a couple uncertainties in my mind, because are we growing in population only, or are we growing in jobs? So where you are like in Marco Island, maybe that's growing in population, but let's be honest, the people moving to Marco Island, they're not getting jobs, and they're not living in apartments for the most part, right? Someone buying a $2 million house isn't going to, be renting a house, renting a place, an apartment first, and then jump into their house. So that's not really increasing a job market of people that are going to be renters for a B-class property. You know what I mean? Right. But if you're in areas that have the job growth, and then you have also people moving in there, then you have, that's the best of both worlds there. And then you have a lot of these towns that have really been building, and a lot of places in Florida and all through the Southeast, really, they've been really decreasing a lot of crime in these areas as prices get too expensive in hot areas and people are start going into different areas that were considered maybe not as hot or as optimum, I guess, for somebody moving in for a B-class property, and now they're becoming a little gentrified. And those are kind of the areas that you're also looking at to see where the wave of gentrification is going, and kind of being, you don't want to be the first on that, but you want to really see that neighborhood is really a lot of money's being invested in that area, and that those are great places where you're buying over a 5 or 7 year period where you're going to be able to, do well in. And it's going to be a little bit more difficult if you have a shorter time horizon. That's why we always preference with our investors 5 to 7 years, even if it ends up being half that time. So it just depends on what you're doing, and to let everybody know that, hey, this is not something where you're guaranteed to get your money out in 3 years. So.
Right. So working with a company like yours could actually make you a lot more money than if you tried to do it yourself, because you know exactly what to look at.
Yeah, it depends. It's like mainly what the passive investing is great for. It's for business professionals. If you own your own business, if you are involved with another high paying job, or you're self-employed, or you're a real estate agent, and it allows you to start investing into assets that are not correlated to your income. And it allows you to get another income stream that's going to be separate from what you might have in some sort of retirement account, where you're not able to touch it for, in some cases, 40 years, depending on when you start investing. Right. So I feel that passive investing, especially for entrepreneurs that might have slow seasons and anything like this, it's a great way of adding additional income streams to your whole income.
Oh, that makes sense. What would you recommend as good ways to boost property values for investors?
So what we do is, when a little different, if you have, most people are they're aware of like 1 to 4 unit properties, and these are just regular single family, and then duplexes, triplexes, quads. And in this, how these properties are really priced is they're priced on comparables in the neighborhood, and what comparables are selling, and it gives you little control over what you're doing. When we're getting into commercial multifamily, and that's when I'm talking 5+ units, and we have the ability to increase the value of that property when we increase the net operating income. So in other words, that allows us to be able to, once we're able to lower some expenses or increase the income on that property, we're able to increase the value. And normally how we do this is what's called a strategy, what we employ and a number of other firms employ, which is called value add. And that's where we go into an area, go into a properties. When we're looking at properties, we see other properties that are nicer nearby that have already been renovated. And what we're doing is we're really modeling what we're going to do with this subject property off of what they've done. So maybe they have a similar property, and it's a great comparable if we were to, say, invest $5,000 into the interiors of the property. And maybe we have to redo a roof and some other things on the property. So we'll work that into our numbers. And then we know that, for putting this money into the property, we can increase rents by $200, let's say. And that is where we're able now to have a plan. The business plan is able to show us that over 36 months or over 48 months, this is what we can achieve. And at that point, once we've achieved those rents after doing the renovations and putting in new property management, then what we're able to do is we can refinance the property. So pull out a lot of the equity and value that we've just developed there, or we can sell the property. And at that point, sell it to someone that's interested in having a property that is running at full potential, optimum, which is really, you're going to be selling it to more institutional buyers and maybe life insurance companies, something like this, family offices, maybe in some cases. So
very strategic what you do.
Yeah, it has to be, because there's a lot of moving parts with it. You have a lot of people, you have a lot of tenants, and then you kind of have to have a plan of what you're going to do. So you can, it has to work for everybody, because the main goal is that we want to keep a lot of our tenants, as many as possible. So really what we'll do is we'll renovate units, and then we give the option with tenants, hey, do you want to stay in this unit? Do you want to move to this newer unit over here? Do you like whatever you'd like to do? And that allows it to keep good tenants at the property.
Oh, mhm.
And it allows them to live in a different unit. And it really depends. But most people, if after owning a property, most investment groups, let's say that we're buying from, that have owned the property for 10 or 15 years, they really have kind of gone lax on doing renovations and updates.
Mhm.
And it's been a little bit stagnant. So you might have stuff that's breaking consistently. And when tenants see that you're coming in there doing work and allowing them to stay at the property, but maybe in a different unit, that'll makes it much easier for them to move. But it's also, it makes it their whole living arrangement much nicer.
Right, that makes sense. Wow, so much to learn. Do you deal in new construction too, like if an apartment complex is being built?
So I have one partner of ours that does focus on doing development, and we have one that we are in the works on finalizing right now. But it's something that we do work with, but it's not something that we've been really focusing over the last few years on.
Okay. You would probably know, though, are there still big construction delays that were going on in the last couple of years, or has that kind of evened out?
The main thing we've had that we've kind of had to work our business plans around is getting supplies and materials. And that has gotten much better from a few months back, but it is something that we really have to, you really have to keep an eye on, and you have to really plan in advance when doing these projects. Because say if, like, we just bought a property a few months back that was 157 units, or is 157 units. And you don't know if you're going to have 5 people that don't want to renew that month or 15,
Sure.
right? So, and once somebody doesn't renew, that's when we want to, and they're moving out, that's when we want to do the renovations. And if they just keep on wanting to stay there, and that's fine. But that's usually how we'll do it, is that when they move out, or when they want to go to a different unit that's newer or something like this, that's when we'll renovate the old unit. So that's the thing, is you have to have your supply chain and your materials ready, because you want to make sure that you can do that unit in, say, 2 to 3 weeks tops. And then you can have it re-rented. And so it's very important, because if you're missing, you do everything and you're missing like faucets. I mean,
Right.
you know what I mean?
You're
Even
gonna miss
something,
that.
right, you're not going to rent it, right? So the thing though is that it's important that you have to have all these materials ready, and you have to be able to have also, now you're on the other balancing act, is you're having your contractors and making sure that they're able to do the number of units. So maybe you're doing 2-3 units a month because most people don't want to leave. And then you start getting 8, vacancies a month. Well, now they have to, hey, do you have another team to do these other renovations? And so it's kind of a balancing act in that sense. But that's where, if we get too many, that's when we start hey, we'll just paint and clean and rent it as is. And
Sure.
then next time it comes up, we'll
Right.
renovate it. So it's just, it goes back, if you have a plan, but it always changes a little bit.
A lot of moving parts, it sounds
Yeah.
like. So I don't know what this is called. Maybe there's a name to this type of investing, but I lived most of my adult life in Santa Barbara, and some investors have been coming in there and buying, having their investors buy a piece of the property, like maybe 5 people would own a piece of the house. Is that something that you have worked with, that type of investing?
A piece of a residential property?
Yes.
Like, oh, like 5 people buying into
Right.
one house?
Yes.
Oh, it's not something that we focus on, but I've definitely heard of it before. It's
But
kind of
you
like,
do it with multifamily. I mean, do they do that with apartment complexes where you have many investors?
yeah, it just depends on the size of the investment, because like if we're raising $5 million for a property, you're probably going to have, in a deal like that, you might have 60 different investors. You know what I mean? 50, 60, 70 different investors in that deal. So it's similar, but it's also, you're going to have you've kind of made that decision, because if someone owns portions of a property, like I've seen that a lot with like ski houses before.
Sure.
And that's kind of like almost like a timeshare type model, I
Almost.
guess. But if they're renting it out, it's much different, I guess, because
Right.
then, hey, this is a totally an investment property. So it's we're trying to have it rented every 52 weeks, right? All, not going to have any extra weeks that are just for owners. But it's similar. It's similar where we're going in as a group, as a syndicate.
Right.
And if some of those investors in the example that you utilized was passive, then they'd be set up with a similar syndication type model like we are.
I see.
It'd
I
just
love
be,
the idea
yeah.
of being a passive investor. Now, if somebody has not been an investor, maybe they've been in the stock market, but they're a little scared what's going on with it. And, you really, I think, can't go wrong with real estate as long as you hold on to it long enough. But how would they get started? Would you suggest they watch your YouTube channel, watch some podcasts before they contact you just to learn a little bit more?
Well, we have a free passive investing guide on our website at harborsidepartners.com. And then you can join into our newsletter from there. And we send out a 3-week kind of passive investing course and explains about our journey through it. Because myself, I'm a passive investor in many deals as well, not just a general partner. I love passive investing. It's a fantastic way of diversifying your wealth between different properties and having less volatility in your real estate portfolio. Because if you're buying, especially in an expensive area, and you might have to put, you're buying let's just say $500,000 apartment complex somewhere. And, you might be out of pocket when you're buying that property, nearly $200,000 between your budget for doing renovations, your down payment, all the fees. With the passive investing, you're able to put that now into 3 or 4 different deals, which is going to lower your risk. Also, it's going to save you a lot of time because you're not finding and sourcing those deals and doing everything with it. But it's also going to give you, instead of maybe that was a 10-unit property you're trying to buy or a 5-unit property, now you might have diversification over 800 units. You know what I mean? If every property was 200 units, that's going to give you a lot less volatility if we ever went through anything like a COVID again. And instead of having 5 people paying you rent, now you have, say, 800. So that's how I look at it in my personal investing. And that's how I like to explain it to other real estate investors who love real estate, but they just don't want to deal, as we call it, with tenants, termites, and everything like that.
I'm with you there. Yeah. And so it gives you a really nice lifestyle with money coming in, with you not having to be called, like you said, for termites and all the other things.
Correct. Yeah.
Yeah.
That's the whole point of it. Yeah.
Yeah, that's wonderful. So before we go, I definitely want you to share your contact information. And you have said it once, but I want people to hear it again, your website, how they would email you, and your podcast, just everything.
Sure. So you can go to our website, which is harborsidepartners.com, and you'll have all the links there. You can also get the guide, the passive investing guide. It'll be emailed right to you. So sign up there. And that also puts you with our weekly, we have a weekly Wednesday real estate newsletter that we send out that goes over a lot of things in the economy that I think would be very interesting. And it's something that I review those articles before we, okay, sending them out. So websites that I review myself personally. And then you can also, if you're interested in learning more, there'll be links to our YouTube channel on there. And then also my podcast, which is called Global Investors Podcast. And that's also .com. So if you want to go there and learn more about what we do with real estate and learn more about investing passively and also actively.
Gee, thank you so much. You're truly a great icon of real estate, and you've been so patient to explain how this all works. I really appreciate it.
Thank you so much for having me on, Patty.
Thank you. Bye-bye.